You are watching Market Watch, the brief overview of the key events from the world of finance. About 6 months ago, for the first time, it began to be said that high inflation could become the norm for a long period of time. It may not be pleasant to realize, but despite record high interest rates, the Consumer Price Index exceeds the target by more than 1%. Developing this topic, it becomes obvious that the interest rate will remain significantly higher than the levels observed until 2020. If the Fed's key interest rate gets stuck above 3%, then the yield on U.S. government bonds will exceed the average over the past 10 to 15 years. U.S. Treasury Secretary Janet Yellen expressed the opinion that the probability of a return of market interest rates to the levels prevailing before the COVID-19 pandemic is extremely low. But this does not mean that demand for risky assets such as stocks, raw materials, and even cryptocurrencies will decrease. This only explains why, despite rising inflation, investors and traders did not sell stocks, which allowed key stock indexes to continue to grow. The main idea is that we are witnessing another change in the rules in the financial markets. More precisely, they have already happened, and now the U.S. government agrees with them. The main change is that there has been an increase in all asset classes. Stocks and, as a result, U.S. stock indexes have updated historical highs. Gold followed, approaching the $2,200 mark for the first time in history. Also, the yield on U.S. government bonds has been held at a really high level for a long time, although not at a record level. The simultaneous growth of risky and protective assets over a long period of time is something new. Consequently, the consequences of such a situation are extremely difficult to determine. The cryptocurrency market is no exception, succumbing to the general euphoria and showing stunning results. The capitalization of Bitcoin has already exceeded $1.4 trillion. For comparison, I will say that the value of all issued Bitcoins already exceeds the value of all shares of the media company, which owns Facebook and a number of other companies. This suggests only one thought: perhaps the proponents of the fact that the economy and markets are overheated are right. In this case, it may not be a soft landing at all, as the Fed expects. Most likely, it would be correct to formulate this question in a different way: when and with what force will the decline occur? That's all I have. Follow the news carefully and be prepared for all the surprises of the market.